Good afternoon, traders. This is Christian from Tropic Trade Group, and this is your end of day market recap for Thursday, September 5th, and a day that could be summarized as, a little bit of upside in the first hour of the day. Once again, fade, and then a lot of chop on our hands today. Risk disclaimer in front of you: everything that we're going through is for information purpose only, not everything that we're going through is for information purposes only, not giving out any investment advice or anything like that. Education purposes only. So I will try to be a little bit more positive today. I think in yesterday's video I was pretty negative, but listen, that's the way I get when I don't like what the market is doing, or when I don't like the market opportunities. I do tend to get kind of you'll kind of hear me just be a little bit more negative, and I really try to be pretty objective and kind of I try not to sugarcoat things or tell you obvious things. Right? I see a lot of people who do that, and I get it. Like, they try to like hedge themselves on Twitter, where they say something to the effect of like, "Oh, tomorrow's going to be a really, it'll be a really interesting week next week." After we've had a down week this week. Sure, absolutely, it's going to be interesting next week, regardless. But we're now down. The S&P was down today, so I think that makes 3 in a row. Interesting, the VIX was also down today too, and it was kind of riled up in the beginning of the day, but it did close down on the day. Let's see if I could bring up my chart here. Yeah, kind of sideways for the day. It does say it was down 6.66%, spooky. But so far I think that what we're seeing right now, and in case you either have short-term memory or if you weren't trading last year, this market just seems like it's very much trading like past September. So now it doesn't mean necessarily that we're going to go straight down in September, but you can kind of see how this is going through here. And the issue too is, like, I don't see a lot of support here. I mentioned, like, in my pre-market note, my midday note, that it was like, hey, I want to see the S&P hold on to the 20 and 50-day moving average. So this is kind of more of a position of weakness. We're now below the 5 period, so you can kind of keep drawing lines lower if you like, to say, oh, if it's not this line, it's this line. But we ducked below the 5 period moving average in the beginning of the week. We also have undercut this 50-day moving average and 20-day moving average. So, longer. So again, like from a short-term standpoint, this is pretty, it's pretty weak. From a long-term standpoint, you may actually want a dip here, because this will allow you to kind of put some money to work. And we'll see. We're still very far from those lows that occurred, back in the beginning of August. But it just feels like this is a bit of a slow leak lower. And I think if you look at this in terms of the 5 minute today, right? Here's your first hour, and again, like, I haven't used this term in a long time, and I don't mean to take offense to anybody, but back in the day when I used to trade institutionally, I often heard people talk about amateur hour. What's amateur hour, you say? Amateur hour is the first hour of the trading session. It's where all the it's where retail does a lot of trading, and then the big boys and girls come in, and that will kind of set the tone for the rest of the day. But the first hour of the day is basically for that. It's kind of for it's not for the pros, it's more for the amateurs. And you could really the market could really move in a direction, because of some hype, before things kind of get settled down. And what we're seeing is, once things do get settled down, the market just kind of comes in and takes control, and you could see the volume picks up here in S&P futures, and kind of asserts itself. I was surprised, because we did see a 1 o'clock move here. Usually we see these moves when the market kind of asserts itself to the downside. We'll usually see like a 12 o'clock bounce. The market stabilized itself, and yeah, we got a nice push there. But again, the heavy lifting, the market can't seem to do the heavy lifting right now, which is basically turn and go and stay positive. For the first hour, it can do it, and that's a lot of traps. If you're not, if you're adding into strength in this market, it's kind of a recipe for disaster into strength right now. You have to be selling into strength. Also, another thing that's going to confuse the hell out of you that I'm going to say is that from time to time, even though we could look at take a step back here and look at the weekly chart, right? And of course, we're still in a nice uptrend. We're just consolidating, and taking a break here, and we're doing it right as the script basically tells you, is that we're doing that in the weakest time of the year traditionally. The point that I'm trying to make here is when we do have these moves, in September, and where there's weaker seasonality, the market will often act as it will act more in the short term as a bear market. And that means that, up moves like this morning get faded. Possible breakouts get faded, especially in growth stocks. And you're just there's a lot more fades that go on rather than actual, powerful moves to the upside. So for now, we've have a little bit of a dose of that, right? Just feeling of like a bear market. Again, in the short term, I'm not trying to say that the market is changing, because people get very hooked on whether we're in a bull market or bear market. I'm just saying from time to time we exhibit characteristics of a bear market, and that's kind of what it feels like as we've entered September so far. We'll see if it changes. And it's funny because I see more people putting out this chart, but I've been talking about this for quite a bit, since over the weekend, is where I tweeted this out. But I talked about how this is very similar so far. Not exact, and again, it's not going to, as I have mentioned earlier in the week, right? History is not going to follow exactly, but there are going to be certain things that rhyme, right? And this is what happened in August of last year. We had a nice bounce up, but didn't take out the previous highs. We kind of hung around here, got to the beginning of, got to the middle of September, and then took a swoosh lower. So again, I don't think that it's going to follow day to day like that, but so far I think it's playing out. So another thing that I thought was kind of interesting for the day, there's a couple things, right? And I'll bring up the chart of Berkshire, which has basically been there's been some really nice moves, and this has been one of them, of course. I've talked a lot about this stock over the course of the last couple of weeks, but you have to be able to take profits, right? And it's the old, I don't know who made up this phrase. I hear Kramer say it all. Kramer used to say it all the time, but bulls make money, bears make money, and pigs get slaughtered. So you have to be careful of this. I think I sold this 2 days ago, and either 2 or 3 days ago, I sold this, and it moved up. It's continued to move up. But hey, I made money in the stock, and that's what counts. Because at the end of the day, some of these lower volatility type moves, they are going to get crunched like this. They're not going so you could ride ride in the utilities, the staples, but you have to understand when things get really overbought. And I try to mention this, that then the RSI is a good indicator of that, right? You don't want to be adding risk, in my opinion, when you start to get like way over 75 in the RSI, right? And the RSI can be very different for individual stocks versus larger indices and sectors. When you get really heated in terms of the RSI on like the S&P or the Qs, normally, and I would say 90% of the time, we don't stay there and overbought for very long. And usually something like this will occur. Now, I don't think that this is over. I think that this comes down and probably meets the 20-day moving average. I just don't think that these things you're going to push these things to crazy valuations. And again, that's the financials, which have acted. And again, these things have acted wonderfully. But you have to understand when you don't want to overstay your welcome in a consumer staple, and this didn't even have that bad of a day, but utilities, like you just have to understand that these things are not going to keep going up in a straight line. It's like they don't have the growth behind them to do that. Right now, there's a theme that's playing out. People have run into them for safety, and for dividends and things like that. But it's not going to stay like a safe place. In my opinion, going up in a straight line. So I thought that was one of the major themes of the day, and it's kind of like a life cycle type of a situation where eventually there's going to be profit taking, right? And that's, by the way, in anything, right? Things go up, you see profit taking, right? And then big investors wait for a dip and then they kind of come back in a little bit. So the question is, are we there yet? I don't know. I think, trying to take small bites, and I'm trading in this environment. If I'm going to be in front of the screens, I definitely tone down my trading, but I'll also try to take some shots and things. Here's one stock too that I think is interesting, and there's a bunch of them, right? JP Morgan, right? JP Morgan has been sliding back here. I'll wait till it reclaims this top of value, and I'll give it a shot versus that. But this is the best name in this group. It's not that far off the highs. It's about $4 or $5, but these are uptrends, and I would rather be going after names that are dipping in uptrends, and then once they begin to turn back higher again. So that's the name of the game. You know, I can go through a couple other charts with you. Another thing, so Costco has been trying to turn the corner here. We'll see if it does. Again, I don't know. I just don't know if it's a deep enough of a pullback, considering how this market is reacting. Tomorrow we have a jobs report. Again, I'm sorry to downplay so many things, but like everybody's like, oh my God, it all depends on the jobs report tomorrow. Could it be an excuse for the market to rally? It could, if the market comes out better. But like, so this is why what I'm advocating is just patience in a difficult time. Because, for example, which I kind of view this as more important than the jobs report, depending. Right, depending on if it's in line or what it does. But this is the ISF services. This is a leading indicator, and again, you could Google economic indicators, lagging versus leading, and the ISM is a leading indicator. It tells you what business is doing, and it came in a little bit higher than expectations. It's not hot, but 51.5, like that's perfect. It's just that the market is going through kind of a difficult time right now. So you just kind of understand that the market's not going to rally on that for longer than 2 seconds because of the situation that we're in right now. So the more that you could be patient with this, right, and the more that you can, try to get some base hits and so on and so forth, I think. I think that's good. So we have to get through the jobs, the jobs report tomorrow, because everybody's so fascinated with this jobs report tomorrow. The other thing that's a little bit concerning too, and I really think that we need to get away from this, where the market is so dependent right now on what the AI trade is doing. For example, like a whole bunch of companies report after the close today. Bring this up appropriately, and look, you've got a few names, and this is even just the small names. Sorry, this is the larger names, but you've got Path up 9%, Guidewire, GWREs up 6.7%, IoTs up 5.8%, right? So there's a few good earnings reports that came out, but the market doesn't care about any of these names. Now, I get it, most of these are smaller names, but as soon as an AI related name comes out, like obviously Nvidia, which again, so be it. That's a large name in the indices, but Broadcom is not in SPY. It's only 1.5% of the S&P, but it will move as soon as those results come out. Boom, it's moving the market. So my issue that I have is that the market, I think, needs to get over this AI theme and move on to something else. I just don't think that AI is going to be able to drive the market forever, and it's almost like AI has kidnapped the market. I think that there will be other stories. I think technology is going to be something that is going to not go away, but I just don't like that the market is so dependent on this AI trade right now and whatever these chip names do. So eventually, maybe this will work itself out, but I think that the market won't be ready to rally, because I don't, I think it's going to be very difficult for AI to be the theme that's going to carry us higher. I think the majority of the game, and again, this is just my opinion, you could disagree with me, it's fine. I don't think the AI theme is going away, but I think the majority of the gains have been made there. I don't think Nvidia is going to continue to grow as fast as it's been growing. It's just not possible, right, for a company to continue to grow like that. So it's a little bit of like economies to scale. And I think that most of that I hate that term hyperscaler, but I think most of these companies are they're already have spent the money, or like they're not, I don't think they're going to go out 2 or 3 years from now and continue to spend money on AI like they're spending it right now. So the market will need to go on to something else. Again, it's not to say, like, I'm not saying that they're not going to spend any money on AI. I just think that they're going to they're going to move on a little bit, just like we kind of heard from cyber companies, right? Cyber companies, for a while, everybody was ramping up their spending into cybersecurity. But the issue with that is, and we've heard this from various different earnings calls, is that companies don't want to continue to spend X amount of money on cybersecurity. That they want to be as lean as possible, right? They don't want to have these big expenditures in cybersecurity or in some other area like that. They want to control their expenses and kind of wean themselves off of things that they don't need. So that's my take on this. So again, I try not to be negative, but I just think that this market has to kind of reprice itself in terms of this expectations about AI, and I don't think it's there yet. And again, it's not to say, I'm not saying that the market can't rally in the short term. That's not what I'm trying to tell you at all. I just think it's going to be something like this for the time being, where you go up a little bit and then you come back down. You go up a little bit and then you come back down. Now, I don't know how long that lasts, but I think that we have not gone through. We're not close to getting through that yet, right? We're just in the beginning of September. So I'll leave it there, guys. I'm sorry to be negative, but I'm just seeing it in the price action. Oh, I wanted to talk about Tesla. Obviously, and again, sometimes when I'm super negative about something, you know, you could use me as a contrarian. But this made a nice move today. What I would watch for this, notice that this did get to its overhead supply, virgin point of control, and that's as far as it went today. So if you're using the MarketWebs, you're probably saying, hey, that was pretty excellent in terms of that's where price went to. And when everybody's cheering and doing, patting themselves on the back about going long Tesla, right? You want to be using this to be basically taking profits. Now, I'm not trying to tell you that the trade in Tesla is over with. I'm just saying, watch your overhead supply, see if it can break through this 231 level. All right, guys, have a great night, and I will see you tomorrow.